G'day all, Ben here, East West. Going to take a look at uranium. Not a great week, was it? So let's just jump in and have a look at a few different aspects of the market here as it sits on the close on Friday. So we'll just look at a few different things here. So this is CCJ. Now I'm just looking at these are the correlations between the indexes as we've seen. Now, sadly for CCJ, you can see here that the correlation with the Nasdaq is the strongest, and we sort of know this week that the Nasdaq has been the one that's been absolutely hammered. So unfortunately we're not really correlating as much to the S&P. Sadly, definitely not to the Russell, which has been where most of the money's been flowing this week. A big rotation into small caps, and of course this is XLE, the energy fund, which is not correlating to it all. In fact, it's got a negative correlation. So that's not perfect, is it? How much you can draw of this, I don't really know. I don't know if I'm going to put too much weight into looking at CCJ or any of the other uranium stocks against the indexes. I don't think it's that relevant, to be honest. But the only thing we can see here is that we are correlating the hardest to the Nasdaq. So we would hope that if the Nasdaq finds its feet and starts to rally, that might. Well, I don't know if that's going to help the uranium stocks, but it is what it is, guys. So this is what we can see at the moment. So just as something a little bit different, what I've done here is I've actually borrowed some code that I found online, and I just created this CCJ seasonality chart. So what we can see here is, and these charts are basically just all the historical data put together, and then you just work out the averages of what has happened on each day of the year. So this is tracked coming off the peak here. It's tracked reasonably well. Now, this low point here is day 228 of the year. So that equates to about the 15th of August, round about there. So we would hope that sort of round about that time, we'll mark this off on the chart, but we would hope that round about that time, if this is going to track the historical norms, that the market will hopefully find its feet and start to rally into the year's end. But we are getting towards the end of the seasonality weakness, or at least what we've seen with CCJ over time. And just as a side note, anyone who's into Python, I'll put a link in the description to this code so that you can run it yourself, because you don't just have to do it on CCJ, you can run it on anything. As long as it's got a decent history, this can be applied to anything. So that code will be made available to you absolutely free as a gift from me. I like to try to produce something useful rather than just fancifying things. So anyway, what I like to do, we're just out here on a weekly now, what I like to do after such a bad week, and this has been a heavy week, right? It's a bad week. I like to just sit back and just think about some of the bigger picture connotations of what's going on. So the first thing I'll do is this says August 12 because we're on a weekly, but this would be the 15th. So that would be round about that date where we would expect that seasonality to start to kick in. Well, we hope it does, because otherwise the market could be in a fair bit of trouble. So the first thing I'll do here is I'll just bring in the Ichimoku cloud. Now recall, this is basically just a visual representation of the time and strength of the trend, and so far it's okay. Like I would be worried if this got through the other side of that weekly cloud. That is just a big sign for me that you can expect a long period of underperformance and a soggy market. So we don't have that as yet. We're just sitting below the Kijinsen here. But as long as this cloud maintains, and maybe what's going to happen here is price is going to come down and test that cloud, that's fine. But we'll just see that the market's trying to hold its feet here at the moment. But just in the big picture, as long as this cloud holds, I'm not uber worried. But I'm always cognizant that the market can come off. It does happen. It could happen. I'm not anticipating it, but you can never rule it out. So just as we come in here to the daily, you can see that this would be the sort of zone that you would hope the market finds its feet. But there's no guarantee it will, of course. It is under some pretty severe pressure. But this is the retracement zone, and we did have a pretty broad band of support through here. There's one little smash down here, but we found our feet again very quickly. But we're back here testing this. So this warrants some attention here. I'd sort of couple with that we've got just over a 1-to-1 move here when we talk about this swing to this swing. Okay, so this would have represented 1-to-1, but this is very, very steep. We've just tickled through it. So there's no guarantees it'll stop there, but you just start to build these signs and put it together to see if you can make a case for the market finding its feet. So I wouldn't be. The other problem is, we are in a downtrend. There's just, once this low gave way, that's it. That's a downtrend, and so we've got a fair bit of work to do before we can break this. And that, I don't know how long that's going to take, but that would be the obvious point that we need to get back through. Now, there's a couple of other things here that I'd just be wary of. So I've done this before, but we've got a daily gap in the chart here. And a lot of people will say, yes, so what? They don't mean anything. Maybe that's true. But I've run the test since 2020. There's been 44 bull gaps in CCJ, and 81% of them have been filled. So now that we're this close, does that make that a natural target? Well, if this was going to come down and fill this, we would come down here to the next fib zone, which is sort of down here, the 1272 to the 1382. So there's a little bit there, and you know what? It might even just wick through there, and it might just be a wick and a bounce. But we don't know that yet. We're just looking at the chart here and thinking, okay, well that would probably tie into this a little bit. That maybe the market just, we've got this as well, just as the lower edge of support. But maybe the market just wants to track down here and just test into there. Okay, and maybe it's it's going to play into the time. Who knows? Maybe we get something like that. It's really difficult to say. Okay, but I think right now what all we've really got to do is observe what's going on in the market, because what we want is this trend, this trend leg, okay, this really sharp one, and that's sharp. We need this to start to terminate into a range, okay, just to find its feet. Once we do that, then we're going to look for the breakout. That would be the sort of plan that comes to fruition, but we don't know where this is finished. This might be down here, okay? So we might do something like this, sadly, but that could be the point of call. But this sort of structure is that's what we're on the lookout for, okay? That sideways chop where the market can start to absorb some of this selling, because right now it can't, and that is why we're getting hammered. So yeah, I think that's all you can really do now. I don't think I'd be stepping up to the plate too quickly to try to buy this. I'd just be looking for all those sort of classic trading signals that we start to get some divergence, like this, like we got here. See, this trading range, a push but a divergent low. That would be the sort of thing I'd be looking for here. Something like that. Okay, something that terminates into a range, finds its feet, and maybe you just get that little bit of divergence coming in around about mid-August when that seasonality kicks in. Maybe this gap just gets filled, just tickles through it, something like that. That's what I'd be looking for. Once I saw that, then I'd just be looking for the next leg of the trend to begin. Okay, but until then, I'm steering clear. I'm not really interested in trying to buy this just yet. Now I'm just going to quickly do the same thing with URA. I'm just going to look at those two today as the big overheads. But if you are using this code, just be aware that here you've got to change a little bit here, right? Because the problem with the seasonal chart of URA, when we look at the big URA chart, is that all this doesn't make for very good seasonality because there was nothing going on. So what I've actually done here is I've taken, I'm just coming from the start of 2020, so I'm just looking at the seasonality of what's basically happened through the run. With Cameco, you can do it differently, obviously, because it's got much more price history, so you can import it all. But just with these ones that have got shorter time frames, I've just cut down to look from here. So here we are. This is URA. Okay, so we can see here that seasonally we've got a little bit of a point down here. This is what 231. So that's going to correspond roughly with where that CCJ sort of potential bottom is. But I wouldn't be. I don't think this one is as useful. I wouldn't be getting all excited about that. Because the price history is not very long for URA. Nonetheless, it's kind of sort of tracking it a little bit, isn't it? It's kind of there, but it's not. Obviously, at the moment, we're under a bit of pressure. Whereas in previous years it's kicked away by now, but we've got this bottom here, so it's kind of correlating. Yeah, this one not as much. Okay, I wouldn't put too much weight into this, but it's interesting that we just do get this kick around that same time. So it's kind of the same thing with the cloud. I mean, we're still a fair way away from the cloud, but the cloud itself is maybe not quite as prevalent because of the lack of price history in the chart. Okay, because it's it hasn't established through all this. It's only just starting to get its feet here. But yeah, this will probably become important in the future. But right now, I don't think it's hugely helpful for us. So we'll just leave it alone. And this is kind of where I sat last week, where I was hoping, this is what I was hoping to see, but what we hope to see and what we get are often different things, aren't they? And this has really upset the apple cart. So yeah, I mean, I'll remove this now, obviously, because that's what I was looking to happen, but it didn't do it. Now, I think I did note that I wasn't happy with this being a C wave because it was quite short. And what would have happened here is we would have had a running flat, which are kind of rare. But the way that this pushed away made me think, okay, well, maybe we've got to make a case to make this a bottom. So what it looks like is going to happen now is a similar pattern where we kind of look at this and we think, okay, we'll look at 1-to-1. So if we come down here, that would put us just below these. Well, this is the ultimate low here, but I've drawn it off this bottom here, being the low after this high. So the three-legged move down, which is pretty common, that's going to put us down there. Now that could resurrect the count in some way. Maybe I'm going to have to change this from being an ABC because you might have to start to make it a 333 or WXY. But that's semantics. What I'm just looking at now is this, and just thinking, okay, well, and then if we go that way, we've got all this sort of little area of support, and it kind of just looks like that's where the market wants to head. Look, it might find its feet now, for all we know, but it doesn't look good just at the moment, does it? And then, of course, the other thing we've got going on here is the measured move, which is going to kind of bring that in there. So there's a couple of things starting to line up for the market to come down and test here. So look, I use the Elliott when it looks clear to me. It doesn't look super duper clear because this is still obviously in a correction. So I just won't lean into it. I'll draw a structure around something when it looks clear, but if it's not clear, I just take it off. So I don't. Well, this is possible, I suppose. I mean, it could get down there. But like again, I'm still sort of looking for that more. Probably just need to just tighten that up. I'm looking for this area. I think that's what I want to see. And then if I get that down there, same thing, right? I'm looking for basically a repeat, something like that. Some sort of trading range to establish that makes me think, yeah, okay. And then we would look for divergence. Now, this is a good one here because, look, this diverged. But what did it mean? It didn't mean anything because the market still crapped out. So that's why divergence isn't the be-all and end-all. It's just a sign to help you identify a bottom. Now, we did run off this, but we've since broken through. Now, interestingly, on the other side, the RSI topped out at 60. Now that is a warning sign to me because in a bearish market, the RSI, in my opinion, will travel between 60 and the oversold area, like that. Okay, in a bullish market, it'll travel between 40 and the overbought, traditional overbought area, like that. Okay, but right now this is starting to behave like a bear market, so got to be wary of that, guys. I can't really stress that enough. Just because everything looks good fundamentally, you just got to do what the market does, and this is what the market's doing. This is what it looks like. So that is my next point of call coming into next week. I'm just looking for this area, looking for it to try to find its feet and hold there. Okay, and if it doesn't, well, I'm just going to have to make a new plan. Okay, so what's your plan? I don't know. So look, that's it, guys. I don't know, very informative this week, but that's kind of just where we sit with uranium. I think it's just, you got to just stand back and let the waterfall sort of run out of steam. And is it there yet? I don't know. It's going to take a little bit of time, I think. So let's just keep our wits about us. Look for these areas to see if they get tested. Hopefully they don't, and we start rallying again. But I think you've just basically got to sort of set yourself for a month of frustration, I would suggest. But we will see. All right. Well, thanks for watching. See you next week. Bye for now.